Alright, so today's video, I'm going to explain why you need to start investing. So I first came across guys like Graham Stephan, Dave Ramsey, and even Ryan Pineda when I was 16. They all inspired me to start learning about investing, whether it be in stocks, mutual funds, and occasionally crypto. So I picked up some books, talked to family and teachers, and then dove into the different strategies. I was basically on the hunt for a secret way to get rich. Everyone had different picks, whether it included stocks, funds, rarely crypto though. But the one thing they all agreed on was this: time is the most powerful factor in investing. Hopefully, you've already heard that and started investing, but if not, I'm going to show you some numbers that prove why time is everything. Then I'll walk you through my own strategy. So, even after all the research, I didn't start investing right away. It took me about a year and a half, which is okay because I was in high school, COVID was happening, and honestly, I was just focused on hanging out with my friends and playing video games. At the time, Modern Warfare had just came out and Warzone was pretty big, so I was definitely grinding that. Anyways, though, I remember asking my dad, what if this is the best opportunity I'll ever have to invest and I miss it? And he gave me one of the best pieces of advice I've ever gotten. He said, "You can stand at the train station and watch trains come and go, but at some point, you gotta get on." And that stuck with me because no matter how much you try to time it perfectly, time in the market beats timing the market. So let me show you an example using a simple Roth IRA calculator. You can find these online. Literally just look up Roth IRA calculator and you can plug in your own numbers. So let's say at 18, you invest $1,000 and never touch it again. Well, guess what? By 65, that's going to be around $22,000. If you wait until you're 28, though, to do the same exact thing, you'll only end up with $11,000. So waiting 10 years is going to cut your return in half in this situation. I'll give you another scenario too to just show you how crazy compound interest can be. So let's say, again, you're 18, you invest $1,000, but then you add $1,000 every year. By retirement, you could have over $350,000. But if you wait until you're 28 and realize that you need to put more money in for lost time, let's say you put $2,000 in a year, you still fall flat by around $20,000 and you've ended up putting $27,000 more dollars of your own money in. So the moral of this story, the earlier you start, the less you need to invest to build wealth. And this is because as time goes on, your money's going to keep compounding. So why should you invest? Well, I'll give you two reasons. The first reason is to grow your money and beat inflation. The average savings account gives you around 0.41% interest, while inflation is over 2%. You don't have to be good at math to know that you're losing money on a yearly basis if you keep your money in a savings account. Now, by no means am I saying go drain your savings account. You're going to need that money, whether it's for bills, emergencies, and short-term needs. But if you have a ton of cash sitting in your savings account and you don't know what to do with it, look into investing it because you're going to be able to grow your money, and you can do that relatively safely. There's plenty of options out there, and if you want super safe options, look into bonds. So the second reason I'm going to give you guys why you should invest is to reach your financial goals. If you want to buy a car, buy a house, start a business, or retire, you're going to need money. You can save now, which is going to be slow and it's going to be very safe, but you're going to lose money to inflation. Or you can invest, which is going to grow your money quicker, but the downside is it'll have some risk. I recommend you guys avoiding high risk bets like crypto if you're new. And honestly, even if you're not new, I don't recommend having a ton of crypto in your portfolio. I don't think it's bad to have it in your portfolio whatsoever, but it should not be a large portion just because it's so volatile. Now, yes, if you like gambling and you like risk, crypto is probably the form of investment for you. But for the average person that wants something that's safe, steady, not very volatile, don't look into crypto. What you should be doing is researching the market, reading the news, and then making smart, educated investments that aren't going to be super risky and they're going to consistently grow for you over time. And that's honestly what I do too. So my main investment is into the Schwab S&P Index Fund. This is called SWPPX, and it mirrors the S&P 500. If you don't know what the S&P 500 is, it's the top 500 U.S. companies. And historically, this fund has performed pretty well, between 7 and 10% annually, and it only has an expense ratio of 0.02%. The fund's very diversified, and it's overall just a good fund. It's safe, it's reliable, it's honestly what you want. So the next thing I do, I buy individual stocks. Not a huge percentage of my portfolio, but definitely a notable part. And I suggest looking into companies like Apple, companies that are dominant players in their industry. Apple over the years has performed really well for me. And let's be real, do any of us see a future where people still aren't using iPhones? No. Apple is going to be around for the long haul. They're going to keep innovating whether you like them or not. So look into this stock. All right, I also have some bonds. Bonds are very safe. The downside is they are lower yielding, and they stabilize your portfolio. So if you really, really want to get into investing, but you're scared, look into bonds. Bonds are super safe. Obviously, do the research, pick the right ones for you, and your money will slowly grow. All right, so I know I did say that crypto is super risky. I do have a small portion in my portfolio, though. It is very boom or bust, and because of that, I don't have a lot, but I have it there in case it booms one day. This was one of the first things I invested in when I was younger, and that was probably because I was a little bit naive. I did think crypto was going to the moon. It has not gone to the moon, and that's okay. It's in my portfolio. I don't plan on selling any of it anytime soon just because it's such a little amount. It doesn't really make any sense, but it's there. All right, so earlier I talked about COVID and how the markets went down and how I just had this gut feeling to buy while the prices were low. And my intuition was right, but unfortunately, despite my dad's advice, I watched the train leave the station And after that, I decided it was time to get serious into investing. And since then, I've watched my portfolio grow over the last few years, which has been a great feeling. So recently, if you guys follow the news, Trump had his tariff scare. The S&P 500 dropped from nearly 6,200 all the way down to below 5,000. It was sitting at 49.82. And I waited, I watched the market drop, I did my research, and this time I got on the train. I bought in. My dad's advice pushed me to do it, and it's definitely paid off. I didn't catch the exact bottom, but I got a great deal on a lot of assets in the market. And since then, the markets have started to rebound pretty quickly. I checked the S&P earlier, and it was over 5,600. I believe it was actually almost at 5,700. So one of my earlier points, having cash on hand is key. And I've recently experienced that. I never would have been able to buy as much as I did if I didn't have cash on hand. When big events happen and the market goes down, people get fearful. And when people get fearful, they start selling off their assets. And for smart investors, this is a great opportunity. It allows you to get assets at a lot cheaper of a value. And this is ultimately going to help you make a lot more money in the long term. Again, you're never going to be able to perfectly time the market. And as I stated earlier, time in the market always beats timing the market. But when you have cash on hand and you see the market plummeting, look into investing, because you can make a lot of money just because you're buying discounted assets. Obviously, everything I've said in this video, you should not take as financial advice. Do your own research. Don't listen to some guy on YouTube tell you how to manage your money. It's just some ideas, some things that have worked really well for me. And I just wanted to pass on my own knowledge and experiences on you guys. Something to think about, something to consider. Hopefully you learned something from this video. And I hope you guys all have a great rest of your day.